Hello everyone, and thank you for tuning in to the North Main Minute. I'm Joshua Doby. A big foundational planning question with which we're working constantly here at North Main Financial Group has to do with the broad idea of inheritance. Now, not everybody receives an inheritance, and folks who do receive an inheritance receive them in various sizes, shapes, forms, sometimes with restrictions associated with them. So I'm definitely not going to cover all of the topics with regards to inheritance here. Just a couple of real big items. If you are one who has received or is going to receive an inheritance, or perhaps you're one who would like to leave an inheritance for children, grandchildren, beneficiaries, etc. So again, dozens of different touch points here. I'm just going to touch on a couple of them for means of our discussion today. First of all, when it comes to inheritance and you would like to leave an inheritance for others, make sure you understand what that means. Meaning understand what assets you would like to leave for certain entities which may be most beneficial for them. Sometimes that has to do with the liquidity of those assets. So maybe it's the difference between cash and a partnership in a business, which would be far more illiquid, understanding what the differentials are between that. Also the tax ramifications. For example, life insurance, in most instances, is a tax-free kind of receipt by the beneficiary, whereas on the other hand, if they are the beneficiary of an IRA or a 401k, which has been funded with pre-tax assets, then it may be taxable to them whenever they take distributions from that account, which under current tax law, they are required to liquidate over the course of 10 years. I'm giving you some of those nuances and getting a little granular there to highlight the point that it's very important that you understand, okay, if we'd like to leave an inheritance, what exactly would be best to leave to whom? That brings me to the second point. If you are charitably inclined, one of the best things that you can do is to leave assets that haven't been taxed or are tax qualified to a charity. The reason for that? Charity doesn't pay income tax. So when you're looking at tax impacts and tax ramifications for leaving assets to charities, generally speaking, one of the best ones that you can utilize are pre-tax or retirement plan assets, because those assets may never have been taxed, and then when they are inherited or they are given as a gift to the charity does not pay tax either. So something real big to keep in mind for those of you who are charitably inclined. Third big item, and this has to do with the overall planning aspect when it comes to inheritance. Make sure that you understand if you are planning to leave an inheritance to somebody, make sure that they are, in the best ways we can say this, able to inherit. We see this a lot with second, third, and even further generation of beneficiaries. There are folks sometimes who are more inclined and more able to receive that inheritance, and other folks for whom it is a true burden and a challenge. Make sure you understand that. So it may be the kind of thing where you want to establish a trust and have a trustee to be able to help with the distribution and management of those inheritance assets. That's not a blanket recommendation. It's just something about which we want to make sure that you're aware, because different people are in different places and need or want different things. And so there are tools out there that you can utilize that doesn't necessarily just cut a huge check to someone as a beneficiary. That's also very important, critically important, if your beneficiaries are children or minors, meaning that minors, under tax law, cannot inherit directly. So even if you have a minor listed as a beneficiary on an asset and they are in line to receive that, and let's say they are 14 years old, they cannot receive that asset directly. So there has to be a trustee, there has to be some provision of where somebody in the age of majority is managing that asset on behalf of the minor beneficiary until they reach that age of majority. So very, very important to keep that kind of thing in mind. We bounce into that a lot from a planning standpoint as folks are bringing documents to us and we're reviewing them. Very, very important when you're looking at how your beneficiary structures are managed. If you'd like to reach out to us at North Main Financial Group, perhaps to talk about, what does it mean to leave an inheritance? What does it mean to receive an inheritance? Are you managing things in terms of tax efficiency in the best ways that you can? Would you benefit from some tweaks, or maybe more specifically, would your beneficiaries benefit from some tweaks to your plan before they actually inherit? We'd love to hear from you. NorthMainFinancial.com.